Hey, my name's James Nicholson. I hope you guys are well. Now, in this video, I want to talk about the impending property crash. Is it finally going to happen? Well, watch this video to the end. I'm going to share my thoughts. I'm going to keep updating you on this because this seems like a very popular topic that people want to know about for various reasons. Maybe you've got a property, you want to know that it's keeping its value, or maybe you think that waiting for a crash is going to be the best opportunity to buy a house. Now, this channel is all about my investment journey, and I want to invite you along on that journey with us. We're growing our portfolio this year, and I'm building a portfolio for my two daughters. We've got Georgia, who's 21, and we've just bought a house in Doncaster just about next week. Fingers crossed. Just got off the phone with the solicitors about completing on our next project next week. And we're also building a portfolio for my little baby, Amelie. So to join us on the journey together, to see the good, the bad, and the ugly, take that finger of power, spin it round, smash that subscribe button over there. Do it right now, guys. Smash that subscribe button and hit the bell notification. Now, property crash. Is it finally going to happen? Now, lots of different places think that property crashes will happen, and lots say that they won't. So let's look at why a property crash may happen. Now, first off, we've got the biggest issue for most people at the moment is the cost of living crisis. Right, so the cost of living crisis is absolutely hammering people's pockets. Now, the energy like the cap on the energy is going to come up again in October and in January, and they think that energy prices might hit £5,000 or £6,000 on average per house, which is insane, right? Absolutely insane. So if you're on 20 grand, 25 grand even, say you're on 25 grand, you get 20 grand after your tax, then that's a quarter of your money, if you lived on your own, would be gone on that cost of living crisis. That is really, really going to hit people in the pocket. So what that means is that potentially their disposable income is not going to be there, and maybe they're not going to be able to look to buy that new house that they were hoping to buy. Right, so that is a key consideration here. Now, how long is the cost of living crisis going to last? I don't know, you don't know. It could be 18 more months that we've got this cost of living crisis, and that's obviously coupled with inflation, right? So inflation is obviously a key part of the cost of living crisis. So inflation is at 10 odd % at the moment. They're now talking that it might go up to 18% by January. 18%. We haven't seen that kind of inflation since the 1970s. Which is absolutely bonkers. So obviously, if people have less money, they're going to have less money to spend on a mortgage. So that's something that's going to be a consideration here. Now, another thing is that rents are also rising, right? Rents are also rising at record levels. And I've looked at some of my properties. I mean, I've had to put some rents up this week in some of my properties in the southeast. I've actually not gone with full inflation rises for the good tenants, right? So the ones that have paid me all on time and looking after the property, then they are getting way below inflation increases, just like 25 quid, 50 quid, depending if it's a flat or a house, right? But rents have risen. So I have a house in the southeast that currently I rent for £800. I looked on Rightmove, the cheapest 3-bedroom house on Rightmove in that area is £1,100. £1,100. Now, as a landlord, you've got to look at that as a fair exchange. You've got to say, look, yeah, you could look at moving that tenant on and then looking to get the £1,100, but you might get a bad tenant. And so I think that if you've got a good tenant, you should help them as well. And so we've made a decision in that area not to increase above inflation or anywhere near inflation like other people have. Now, if that tenant leaves for any reason and it's vacant, then of course we will go with the market rate. Of course we will go with the market rate. But landlords do have a bad name. Not all landlords are bad. And I just am not looking to put my rents up with inflation. if I don't need to in certain areas. So rents rising though does mean there's less affordability, less disposable income for people, so they're less likely to be saving for a deposit, right? So that's a big consideration. Next is interest rates. So interest rates are rising. We just had the biggest rise in something like 10 or 20 years, was it, the other day? Can't remember. I made a video on it, but so go and check it out, remind me. But it was 0.5%, which is a big jump. So I think we're at 1.75% right now as the base rate. Obviously, you don't get that. What you borrow will be a couple of percent at least on top of that. But interest rates will have to continue to rise until this is under control. If inflation keeps going up and it goes up to 18%, I wouldn't be shocked if they start putting interest rates 1% at a time, and they're talking about the base rate going up to 6%. Now, as investors, what should you be doing? Well, I recommend that you fix your rate. Fix your rate for as long as you can. If you can get a 5-year fixed deal, then take that 5-year fixed deal at a good rate, because that is going to give you certainty while we go through this rocky patch, right? While we go through this rocky patch. So all of these things indicate that people have less money. Last thing is that we're going to go into a recession, right? I don't care what the news says. I think 100% we're going to go into a recession. That means businesses are going to lay off staff. People are going to lose their jobs. Although we've got record unemployment at the moment, we are going to go into a recession. And so all of these things mean that we could have a crash. We could have a crash. Now, do I think it's this year? I don't think it's this year. I've said in multiple videos, still got a few months left of the year. I think that we'll start to see this stuff when we get up to the 18% interest. Maybe at that point, we might start seeing a dip in property prices next year. Now, there are other things that indicate that this might not happen. We still aren't building enough houses, so we still don't have enough property in the UK. We must be building 300,000 properties every single year. We're not building anywhere near that. Currently, the figures are around 100,000 new houses, so we're short by 200,000. Immigration is still on the up, and so that means that the population here is growing. We already don't have enough room for people, and we need to figure that out. And if we don't figure that out, then prices may not rise dramatically, but it could buffer a fall. Now, what will happen at the end of this? Well, I am an investor for the long term, so I'm still carrying on to invest right now. And those new deals, you just fix them for a long period of time, because once we get to 3 years, 4 years past this little dip, then you will be in a really, really strong position there by owning assets that will start to go up in value again, and you should be on a lower interest rate. Now, as investors, does a property crash mean good news for us? Well, not necessarily, because maybe you use equity to take out equity to buy future property. So you're going to have less equity there to be able to do that. If we go into a recession and rates keep going up, then maybe banks will make it even harder to borrow money. And so that's another consideration. In 2008, it was difficult to borrow money for a little while they figured out what the hell was going on with the financial crisis. Now, what will invariably happen is once we get through this period, interest rates will come down again to a much more affordable rate. Remember, the person that owes the most money in this country is actually the UK government. So they are going to suffer with high interest rates just as much as everybody else. So I think that they will have a real incentive to bring those rates down at a steady pace, and that will kickstart our economy again. So what would I be doing in this time? Well, look, there may be some opportunities. There may be landlords right now that are thinking, you know what, now is the time that I want to sell. And there may be some good deals out there that you can scoop up and get at a good price and maybe buy below market value. And then you're not so concerned about whether the market goes up or down. There are other strategies that are very good through these types of times, and that's the buy, refurbish, refinance, rent strategy. And we've just done that in Doncaster. You can see in the pinned comment, the top comment on here, where I bought at auction for 60 grand, refurb for 12, refinanced at 100, giving me 75 grand. Then I built 25% equity in that property very, very quickly in a matter of months, weeks even. And that's allowed me that whatever happens in the market is unlikely to go down 25%. Last 2 times it went down was 15%. So I would still have equity in that property that I've created by adding value to a property. So there's lots of really good opportunity. But if I was an investor right now that was looking to start, which I know a lot of you guys are, I would just go for it. I'd find a below market value property, I'd refurb it, I'd add value by adding bedrooms or extensions or something along those lines. Then you built some equity in, but you secured the lower interest rate that you're getting today, because next year the interest rates will be nothing like they are right now. And that is going to mean a big difference to some people finding good deals and bad deals. So next year, what I think will happen is there will be a lot more deals on the market. There'll be a lot more opportunities on the market, but costs of borrowing will be more, right? So you will get a better deal, but you may be paying slightly more on a monthly basis. And that will even out and mean that there are still opportunities and you can still do very, very well as a property investor. So is the market going to crash? I don't know. You don't know. But there are indicators that are saying that we could be in for a rocky ride. That's an opportunity. Now is the time to get knowledge on property investing, because times like this don't come up very, very often. It's an opportunity of a lifetime to buy things cheaper. So get educated, find out how this all works. We're going to run a live event soon on this, and I'll put in the description a link where you can grab yourself a ticket. It puts you in the VIP list, so you know all about it when we launch that. So go and check that out now. Give me a like on the video, guys. Come on, you've watched all the way through here. Give me a quick like on the video. That helps me with YouTube. Comment and say hi, or whatever, any questions you've got or opinions you've got. I'd love to hear those. And go and check out the other videos on my channel, including this one right here.